You want that. That is a bargain basement price. Buy it.
There's that chance because there's an increased likelihood more than other elections because of the way that the votes have to be counted, that there could be a delay. How does that unique scenario impact the markets?
Well, it really doesn't. Keep in mind, uncertainty only matters if one result would be good for the economy and the other result would be bad. If the Republicans hold the Senate, I don't see there being a lot of disconnects. There will be a lot of disappointment. I think the country wants this over.
Right.
As much as they want coronavirus over.
Right.
And there's going to be disappointment. There is no doubt. But that doesn't mean that the market won't go higher. And that doesn't mean, and there's no doubt that a vaccine comes, and with a vaccine coming, that does mean a return to normal in a lot of other ways. And there's a lot of stocks out there that have been destroyed. And
all of our oil stocks for
oil stocks, like our red oil
crazy.
Portfolio, you want that. That is a bargain basement price. Buy it, because these oil prices will not stay here. They're going to go way higher. I had a call the other day. I'll tell you anecdotally. Yeah. ExxonMobil. I've been personally a buyer since underneath 40. It's now sitting at 33.5. Yes, so that's down about 20%, but I got a 10% dividend on it at 38. When someone says, should we sell that? Should we sell that? Many people have had me. I say, double up and go long, buy more. Mm-hmm. Because you're seeing a price that's a dislocation. Mm-hmm. Now, if you're a green investor, I get it. You don't buy it. But if you're trying to make money and get a dividend, I can't see a better place where you have so much upside potential plus a dividend. Where are you going to get 10%? If they cut the dividend, fine, the stock will go up because they'll just retain the cash. And they're still paying the dividend. It shows you the strength of the balance sheet of a company like Exxon.
Right.
So we're in really unique times. Markets going higher, folks, in general.
This came in from Instagram. So if with vaccines lending a boost to the pharma sector, I'm wondering if the money managers have an outlook on the pharma market volatility. Any comments on the pharma sector?
None. I don't feel that the pharma market, I don't want to make any bets on any of that. You might want to look at some of the companies that distribute it. Maybe there's a value there. But no, I don't feel the pharmas are a good bet. That's already dated. Jim Cramer on CNBC built a kind of a COVID pharma little portfolio.
Did he?
Yes, he did, and it's done nothing. We're a believer in our company. As you can recognize, we're a technology company, so we believe in technology. Mm-hmm. And technology has ruled the day through COVID. The best bet in the COVID environment is not the next manufacturer of pharma that's going to create the vaccine. It was Amazon. It was Apple. It was Netflix. It was the companies that benefited from the lifestyle that we've all come accustomed to. In other words, ordering online, entertainment online. So our focus on technology and the broader market really did well for us this year. And we continue to believe that. I'm a firm believer that you don't chase a shiny car. I love Ferraris, but I don't need to drive one. What I want to do is drive the car that's steady and stable, and it always works. And right now, I feel those companies are strongly, firmly technology companies, and I think they'll remain so over the next 3 to 5 years. And they too will transition in time, but not yet. And nobody can argue that those FANG stocks, also, by the way, created, the acronym created by Jim Cramer, has been the way to go. And anybody that wants to bet against those is making a real dangerous bet. You're betting against very smart people that are ahead of the curve in not only just technology, but in measuring where the country and the world is going in terms of information and devices that get that information to them.
The S&P FANG Smartfolio this year to date has performed like a like 50 to 60%, somewhere around there. Last I checked.
I
So
remember, yeah, we had a month. Do you realize the FANG stocks moved up as much as 70% in August? 70%.
right. So
So, I mean, it's just, even when I look at it, I'm baffled to say, I mean, I remember when everything went up like that, but
yeah,
it's still baffling to see a month that goes up 70% on a micro portfolio. In other words, a group of small stocks,
right,
and they go up
right,
that much.
right.
So, that makes a career for a lot of people.
And last question, because you brought it up, so we got to ask. Steady and stable car, we got to know, what do you drive?
I tell you what, I drive literally the S&P with beta kicker in our
No,
portfolio.
I meant your car, man. I meant your car.
Oh, okay. I'll show you. My old man's car is a Mercedes E63. When you start it up, it's angry sounding, which is what I like.
Okay. I interrupted your thought. You did say that you like to drive, like in your own personal
Yeah, I own
investments, you go S&P and the high beta kicker. So just
high, yeah,
a couple.
yeah, and red oil, SPY eye. Those are the ones I own because
There.
I'm willing to accept the movement and volatility of red oil, knowing what's on the other end of that. I also am willing to accept SPY eye because I think it's a good blend of other types of recovery stock that are not so deeply focused on oil. I'm not really a value investor, but when you see things that have dropped 70 to 80%,
Right.
you must own some of it. And the best way to own it is on something that is not quick to move so much, but something that you're willing to hold for a couple of years, where you have a chance to say, hey, in a couple of years, this is something that could go up more than a 100%. Now, there's not often times when you're in an investing environment where that was true. That certainly wasn't true in January of this year, but it has been true since March, and they haven't really moved much, but that vaccine isn't out yet.
Right.
And they're trying to move higher. Matter of fact, they just went down recently because the second wave, but eventually the vaccine comes out. And then what's the reason to make them go down? Oh, everything's out of business. So Disney's out of business.
No.
Exxon's out of business. Carnival Cruise and all of these. So there's no more cruise lines. I mean, the old people have to do something. So you need those cruise lines. So bet on those old people to spend their money.
Right.
So buy them. So those are things that I would just say, putting algorithms and mathematics aside, that are kind of the great bets for younger people, because where else do you get that? That's something you can sit on and say, I don't care. I just don't care, because it's a good type of bet for the long run. In the long run, I'm not telling you to wait a lifetime. I'm saying wait a couple of years. A couple of years is nothing in the world of investment.
Oh, absolutely. So there you folks have it. With the iFlip app, you get a little bit of the value investing kind of strategy and philosophy in the SPY eye and red oil portfolios. You get a more of an aggressive trader's strategy with like what Kelly prefers with the S&P plus beta kicker. You get a diversification of strategies, which is the real actual nature of diversification. Diversifying with many stocks in an index fund or a mutual fund that's not real diversification, not on a professional level.
No.
So thank you, Kelly, for joining us today. Always a pleasure. Always so educational. Appreciate that, man. And I guess it's time for us to kick back and see what the rest of the night unfolds. I feel like it's like the NBA finals or something.
Chips, salsa, chicken wings, scotch.
That's the most important part, the scotch.